Hello and welcome to this edition of Closing Trades right here on ET Now with me, Asha Faridi, Shrishti Sharma with me in the studios. And the market has had a bit of a flop of a ride this Monday because we started off quiet, picked up nicely 0.5%. That, rebound got sold into. Once again, we dipped down and again made a comeback. So quite a few jagged edges in there. Right now, of course, I think it's the global markets which are weighing heavy on the markets right now. We're sitting at pretty much the lowest point in the day, down about almost 0.4% and just circling around the 22,600 mark when it comes to the Nifty futures. What's weighing heavy? Look at what the global markets are up to, and especially the US market futures. They're falling quite a fair bit. It's a 350-point slide already for the Dow futures. S&P 500 futures as well lower by 1%, and over a 200-point decline when it comes to the Nasdaq futures as well. So they're pretty much headed in for the worst week since September, at least for the S&P. And that's somewhat rubbing off on the European markets too. They too, as I see it on my screen, are down pretty much about 0.2 to 0.5% across the board. 0.5% is the dip that you're currently seeing on DAX, and that's an over 100-point fall. So rubbing off on our markets as well, although for Asia, Japan had a decent day, was marginally higher, but that was not the case with Hong Kong, which fell a solid 2%, or Shanghai, which was mildly tempered and then closed in a little bit soft, down about 6 odd points or so. So that's pretty much the story today. What's weighing heavy? There's ONGC down 3.5%. Trent has fallen only more. IndusInd Bank, and we'll get deeper into why that stock is taking such a sharp knock. 3.5% lower there. And then, of course, there are heavies like L&T, Reliance, Bajaj Finance, M&M. They're also completely turning tide and now standing in the red as we speak. In fact, within the F&O universe, all sectors are in the red right now. So seems like we're taking a turn definitely for the worse. But let me take it across to Naresh and find out what the charts are reading right now. We also will have Kunal Bothra join in just a second. And of course, Deepak Shenoy also here with us. But Naresh, afternoon, what's it looking like? A sudden turn, and I guess it's the global markets weighing heavy on us.
Yeah, so we've seen a sudden quick decline in US futures, and that is affecting. And we've seen a decent enough recovery which happened in Nifty 50. We went all the way closer to 22,650, 22,700 mark. The 22,800 mark would be tough to cross. And now we continue to find a new range. So hopefully the range could be between 22,300 to 22,700 going forward. So a little bit of a dip and consolidation. So time for some bit of a dip in a lot of names across the board. And we are seeing some fresh breakdowns in the derivative stocks.
Well, definitely seeing some bit of a breakdown in some of those stocks. So let's watch out for that. But Deepak, hi, good afternoon. Good to be speaking with you. What do you make of the markets right now? Because the week gone by has been really good, but then comes Monday. Indeed, a volatile trading session. But given this weakness that we are seeing right now, Deepak, what's your sense? Is this volatility here to stay? And what's the long-term trend that you are focusing on?
So there is actually, I think, a weakening trend in general. The rupee has weakened as well today, 20 odd paisa. I think there's also been a reversal in the market, but I feel this is mostly related to the uncertainty at a global standpoint, because nothing meaningful in India has changed so far. One of the biggest threats right now is tariffs and what we will do to perhaps address them. Do we give up a lot of the things that hold our economy in terms of tariffs, incoming tariffs, or do we say that, okay, let's just completely negate incoming tariffs completely that we have already, or some third party approach? Given that the US tariffs on Canada, at least, I think, have been applicable, and to a certain extent on China as well, that will impact the US economy a little bit further down the line. From Wednesday onwards is when their steel and aluminum tariffs come into play. From April 2nd is when I think universally they'll have these reciprocal tariffs in place. Given this next 1 month, I think, is going to be volatile regardless of what happens. But I find that, in markets, price uncertainty badly. That means they just go down regardless of what the fundamentals might turn up. But when there is some layer of certainty, then the stability arises. So we should kind of, look at this rest of this month and maybe the first few days of April as going to be tumultuous in the markets regardless. This will give us opportunities to buy something. It will give us opportunities to rebalance portfolios. But we should assume that stability will only come when uncertainty has gone away. So I would say, think of this volatility as going to remain at least for the next 1 month or so.
All right, so that's the current take. Keep looking out for opportunities. But yes, indeed, the biggest talking point is the tariff. And we spoke with Professor Madhav Das Nalapat, who is the Director of Geopolitics and International Relations at Manipal University in India. Let's go across and listen into his take.
I'm sure the Commerce Minister is working hard to address it. Certainly, the Prime Minister is worried about it and is working hard to address it. Well, the fact is, the US presents an opportunity as well. An opportunity for Indian small-scale sector, medium sector, and by the way, the Chinese have scored heavily in developing their own SMEs and medium, the small and medium sector. We need to do the same. We need to encourage them. And for that, we need good market research. We need tax and regulatory policies that align with the needs of industry to be competitive in pricing. And I'm very certain we can take advantage of it within Modi 3.0. So I'm not worried. This is an opportunity. I see it as that.
Okay, an opportunity, not a threat. That's the word coming in from Professor at Manipal University. But Kunal, what about the markets? Seems like what we had last week was just sort of flattering to fool us now, because once again you're seeing acute pressure on the US futures, and that's taking us down too.
I think most of the surrounding data points is still negative, positive for India. I mean, like the dollar index is still below 104, the crude is still at 70 odd mark. You have gold prices still at $2,900 per ounce. And I think when we look at this kind of a setup, I would probably indicate that we are just consolidating. Now, what's happened today for our markets is there were two gaps on the Nifty charts which were created in the last 1 to 2 weeks. When the sell-off was getting a lot more aggravated. The second gap, for the index was around the 22,700 to 800, 820 band for the Nifty. Now today, after the intraday move, when we went closer to the 22,700 mark, we've just about filled the second gap partially. Now we've seen this price action, reaction earlier also, that when the indices head into the closure of a gap or there's a partial closure of the gap, we tend to see some bit of a intense pressure on those days. But then once the market settles over the next couple of days, that's where I believe that second round of opportunities do arise. So my belief is that over the next 2 days, you might probably expect that some bit of more pressure could be seen on the indices. But 22,200, if the index happens to come back to that kind of a territory, that would be a very good contra-buying zone.
Okay, that's the take coming in on the index right now. In the last 3 months alone, we've fallen almost about 9% or so. Is Deepak back with us? Okay, Deepak is back with us. Deepak, a 9% fall on an index level alone in the last 3 months. Would you say go all in right now, deploy all the money because everyone did have that stock list ready with them? Or would you say wait it out, it's fine to miss out on, the bottom 5% if at all?
I think I'm the second part of your equation, Aisha. I think you'll always miss the last 10% because we tend to sell after markets have peaked and then start to fall. So I say, listen, the last 10% is not mine. It is the markets. And the first 10% is also not mine. It is still the markets. You got to wait till you start seeing the positive sign from the markets. Both in terms of prices and in terms of fundamentals haven't weakened significantly yet. The fear is that they will, but I don't think they have weakened significantly yet. So I think going forward, I'm going to look at cues where markets start to give us either opportunities on a sectoral basis or that the old favorites which have been beaten down come back up. In a lot of ways, I think we will probably see the tempering down of the FPI sales, corresponding to perhaps a point where the markets kind of find a bottom. But we'll probably want to pick it up only after we know what the next set of sectors is that moves. It could be because of the tariff changes. It could be because of government responses. The government may ease a lot of regulations related to business, whether it is extreme labor laws or whether it is the number of OKs you need to set up a business in India. All of these things will benefit different industries differently. And when they do come, or if they come, I think we will want to take a bet on those players when they come in. So I don't think you should be in a hurry right now. There's not the time to sell your house and buy stocks, which is what a fire sale would be. I don't think it's a fire sale yet. It's nice. The valuations have come to better points, but it's not by no means a place where you say forget everything, sell and sell whatever else you have and start buying into the markets. No, it's not that yet. I think you have to be very selective and very opportunity led rather than saying buy the whole market.
Be selective, and it's not the fire sale yet. That's the word coming in from Deepak. But also, there's a news flash coming in on IDBI, where from agencies we are getting up that IDBI stake sale pack to be finalized this month, and India expects to complete the stake sale in the first half of FY26. It's been in works for a long time now. Let's see what happens next. But with this, viewers, it's now time to slip into a very short break. But before we do that, the Leaders of Tomorrow Season 12 Awards kicks off tonight at 5 p.m. in New Delhi, bringing together some of the brightest minds in business. Now, under the theme, Powering Entrepreneurs Hip for the Global Stage, the night will feature thought-provoking insights from industry leaders and, of course, recognizing the most promising MSMEs across 14 different categories. Gracing the event is Shri Anurag Singh Thakur, former Union Minister, Chairman, Parliamentary Standing Committee on Coals, Mine and Steel. And joining the stellar lineup of speakers are Mr. Chinmay Doble, IDFC First Bank, Mr. Aman Gupta, co-founder and CMO of Boat Lifestyle, and Mr. Ashish Kumar Chauhan, MD and CEO of NSE, Dr. A. Velumani, creator Thyrocare, among others. Now, on the global front, Mr. Akis Evangelidis, who's the co-founder of Nothing, will share his expertise on building brands with global appeal. It's going to be a celebration of innovation and inspiration. Tune in at 5 p.m. on ET Now's YouTube channel. Welcome back to Closing Trades right here on ET Now. Yes, a shade of red on Nifty as well as Bank Nifty. We are definitely off the day's highest point, and Nifty Bank is now having cuts of over 320 points right now, and the breadth of the market is definitely not looking that great. But amongst the losers in trade right now, it's ONGC that is seen to be taking the top spot. Other than that, Trent, Bajaj Auto and L&T are some of the draggers in trade right now, and well, of course, IndusInd Bank too, with a cut of around 4%. Holding on in trade. But amidst this, one such stock that is in focus is AGS Transact, because that stock is in free fall as the collapse of the ATM service is causing significant disruption in India's banking infrastructure. Major banks including SBI, ICICI Bank and Axis Bank are facing challenges in servicing about 38,000 ATMs. Let's go across to Sharad, who is joining us with more details on this one. Take it away, Sharad.
Well, AGS Transact is in focus, and this month itself the stock is down 62%, and from its 2024 high levels the stock has corrected almost 90-odd%. Now, what has happened recently, the company and its arm has defaulted in payment of obligations, and this delay has happened when it comes to servicing statutory dues. Now, the total default amount that stands at roughly 21-odd crore rupees, and the lenders include Bandhan Bank, IndusInd Bank and HDFC Bank as well. But there are certain other reasons also which are impacting the stock in a negative way. These include the threat of insolvency proceedings coming from Maxwell Aircon India, which is one of its creditors. Also importantly, credit rating downgrades to default has come when it comes to CRISIL and India Ratings, which came on March 3rd to 4th. Resignation of all 4 independent directors also raising a lot of red flags. And interestingly, the ATM operations, that has also getting impacted for the banks, and that is the second order effect happening because of these issues. Now, the total dues itself is around 726 crore rupees, with the exposure coming in SBI and Axis Bank as well. But there is a greater problem also that needs to be addressed, because the company itself is an ATM services provider to the banking system. And as per reports by Economic Times, this is causing widespread disruptions affecting major banks such as SBI, ICICI Bank and Axis Bank, almost 38,000 ATMs are being impacted. SBI is the most impacted with almost 14,000 unserviceable ATMs. Now, what's happening is ICICI Bank and Axis Bank are actually migrating their ATMs to other service providers to mitigate the issues as well. So, of course, there is a shareholders loss happening, but also a lot of folks lining up in ATM queues are not able to process their transactions as well. So, there's a double problem happening, and also this has been a significant wealth destroyer when it comes to the overall markets.
Right, okay, we leave it at that, Sharad. That's AGS Transact and what we are finding out on this one. The one which has really bled today has been IndusInd Bank. Now, of course, news that RBI has granted a one-year extension to the MD and CEO Sumant Katpalia has not gone down well with the market. Not his extension, but there's speculation that post his tenure extension, that of 1 year, there is going to be an outsider who's perhaps going to be taking the reins. There are, of course, concerns about uncertainty in the leadership, which clearly remain that right now, and the CFO exit and the leadership attrition thereof has also added to further uncertainty. The stock, remember, has already fallen 30% in just the last 6 months, and it's taken another knock of about nearly 4% in today's trade as well. Let me in fact take it across to Gaurav and find out what the brokerages have been saying about IndusInd Bank and Sumant Katpalia getting just a 1-year extension.
First, let's understand what the news is with IndusInd Bank, and now RBI has reappointed Mr. Sumant Katpalia as MD and CEO for the next 1 year. Why this is a negative read-through is that the board has actually recommended that he should get reappointed for the next 3 years, and this is actually a second instance where RBI's reappointment policies did not allow him to get reappointed for the 3 years, and that is the reason why when we look at the overall read-through, it is getting negative for IndusInd Bank. It also leads to speculation that after 1 year we may see churn in the position of CEO, and at the same time it also shows that RBI is a little bit reservative when we talk about IndusInd Bank's leadership. Now, with this, brokerages are also being a little bearish. IIFL cut their target price to around 910 rupees. Why? Because they are now actually penciling in price to book value, a forward price to book value of 0.9 times, which is actually lower than the one time that banks usually get for the business. Other than that, when we look at other brokerages also, we saw the rate cuts and as well as the target price cut across the board. So we've got Jefferies who actually cut their target price to 1080 rupees, because what they are saying is that recently bank has already been under pressure because of the MFI segment, and with this new move it also shows uncertainty with the leadership. When we talk about Elara, we are seeing some rate cuts from there as well. Other than that, Motilal Oswal also maintained their target price to around 1100 rupees. And lastly, when we look at Nuvama, they have maintained their hold rating and a target price of 1115 rupees. But what they are saying is that now in the near term, the earnings visibility will also get lower if there is churn in the upper management. So definitely a negative read through coming up from brokerages as well. And as a result, we are seeing some pressure in IndusInd Bank's share price. So definitely watching out on this counter on the back of the news flow that we have received recently from RBI.
All right, thank you so much, Gaurav, for getting us all those details. So yes, of course, IndusInd Bank is definitely under pressure and no significant recovery from the day's lowest point as well. But Deepak, I wanted to have your take on the metal pack, because like you were just highlighting and mentioning as well, that the steel and aluminium tariffs are going to be effective 12th of March. But back home, Deepak, it's the metal index that has outperformed the returns in Nifty on a calendar year basis. We have already seen a 15 to 20% jump. What's your sense that once these tariffs are applicable, how is that expected to impact the whole demand and supply equation and also on the pricing front? And if anyone has already participated in the sort of a metal run-up, is this a good time to maybe book out some profits and be safe?
So I think from a trading perspective, I don't know the answer to that right now. I think the charts will probably be a better indicator of this. But typically, the cycles have become a little bit shorter now. So one of the threats right now is if the US puts all these tariffs on steel and aluminum that is imported from outside of the US, then where does that steel and aluminum go? So India is one of the places which does continue to import a lot of this, although we are a big manufacturer. We do import, auto grade steel. We import forms of steel which is perhaps not manufactured, and many times when the steel is cheaper to be imported, we do import significant quantities, and we're seeing early signs of that already. And I think we should be careful that the steel companies that are here, specifically those that manufacture most of their goods here, I think they will have a negative impact once once these tariffs come into place. However, you can't say how long these tariffs will last, because nowadays, depending on which side of the bed the US president rises from, the tariffs may come, go, get cancelled, get postponed. So you can't really say, based on the fundamentals, because things are so volatile over there in terms of policy action. But I would generally say be wary, because this is a time when some of that you can materially change profitability of the sector, may change EV to EBITDA levels because of stock prices coming down as well, and change, force the government to start putting anti-dumping duties on some of these other countries as well, which will try to dump in India as much as they can. So I'd say be very careful here. But if you're a trading person, then forget the fundamentals, trade the charts. The prices usually tell you more than you have to know.
Indeed. Okay, Deepak, great to have you on the show. We'll let you go on that note. Thanks as always.
Thanks so much, Aisha.
Okay, 0.5% lower still. We've not really seen any meaningful recovery come by. In fact, if nothing, it's worsened a little bit from there. The breadth as well is looking quite shaky. We're down about almost 120 points. So pretty much undone all of today's, gains from within the broader markets. It's the Titagarh, which is down 6.5%. Dixon is down 5.5%. Birla Soft is down 5.5%. Kalyan Jewelers taking a knock of 4.5%. And CG Power, which is down about 5% or so as well, 4.5% to be precise. And the breadth has completely changed hands. It's a good 194, which is the count to the declines right now, to just about 27 to the advances within the F&O universe. But Kunal, any closing strategies?
So I'll still look at, on the buy side, Avenue Supermarts is something which is looking attractive. The stock holding on to that 3,600 mark, even on a day like today. So looks interesting on a relative strength basis.
Right, Naresh, what about your closing ideas?
So that would be a sell on Dixon Technologies, which has given a fresh breakdown today, expecting it to correct towards 12,500 to 12,000. Give a stop loss at 13,500.
Okay, a buy on DMart, sell on Dixon. That's the call coming in from both Kunal as well as Naresh. We're going to take a very quick break, come right back. We'll continue tracking markets the last half an hour of this Monday on the other side. Back with closing trades right here on ET now, and still pretty much the same, down about almost 0.5% as we speak right now. Let's just bring up the list of losers, because, like we pointed out, there is a trend which is right at the bottom of the heap. IndusInd Bank, ONGC, Bajaj Auto, L&T, Hero MotoCorp. These are all stocks which are facing the heat right now. BEL, some of the technology plays as well. And then, of course, even Reliance, even though there were, a couple of brokerage upgrades coming in the stock consistently, did make a rebound from its 52-week lows, but unable to withstand that in today's trading session. M&M too lower, and so is the case with the Bajaj Finance as well right now. For the broader markets too, it's no different. Let's just bring out that list as well for you. We've been highlighting as to how, there are names like Titagarh, Birla Soft, Dixon, etc., which are big draggers in today's trading session. So that's really, the case when it comes to the markets right now. But here's a view from Nilesh Shah from Envision Capital. He says that the time has come to buy into the market, and that you cannot have a large cap only approach. You've got to buy the mid and the small caps too selectively. He's, of course, betting big on the premiumization theme.
I don't think one should necessarily flock entirely towards large cap, because the biggest challenge with large caps is basically growth. Most of the large cap companies are not growing beyond the single digit rate. And when you are in equities, you are there for growth. You are not there essentially necessarily only for safety. I mean, instead of then large caps, you might as well be in fixed income and earn your certain 7 to 8%. So clearly, I would still believe that one should be constructive about the small cap space. One should be constructive about emerging businesses. One should be constructive about businesses which can sustain double-digit growth rates with a balance sheet which is intact, and with governance, which essentially is kind of non-negotiable. So I think as long as there is growth, there's a strong balance sheet, and there's good governance, I wouldn't want to kind of necessarily make that distinction between large cap and mid to small cap. Yeah, we like this space pretty much. Clearly believe that the government spending and the government's focus on building infrastructure, or basically the private sector wanting to basically create more capacity. There are also some of the other areas where we are seeing a huge amount of greenfield projects in areas like semiconductors, or the EMS players are continuing to invest. Defense is where probably there has been a bit of a lullness in terms of fresh orders, but it's quite possible that probably by the end of this financial year, or maybe even at the start of the new financial year, you will again see a lot of surge in terms of the orders being given out on the defense side. Aerospace, space tech, these are some of the areas where we clearly believe that some companies have been able to create their niche in terms of engineering capabilities and ability to manufacture components for some of both the local OEMs and the global OEMs. So clearly, on the whole, the cap good space, the capex space looks a lot better place now.
All right, that's the take coming in from Nilesh Shah. But with this, let's move on and let's also welcome Mayuresh Joshi on the show right now. Hi Mayuresh, good afternoon. Good to be speaking with you. So Mayuresh, you're definitely, whenever we think of chemicals, we think of you. Firstly, help us understand that what's your current take on the chemical pack, because that is one of the export related plays, and what's been happening in the Europe. Give us some sense that what are you picking up within the chemical basket, as well as anything in particular that is looking interesting to you right now?
Afternoon, Shrishti. No, I think two things. One, I think the expectations in terms of the entire supply chain, when you talk about chemicals as a space, there is one part of the chemical basket which is highly commoditized, including players in the soda ash space, as an example, where China has a huge dominance. And the other spaces which in reality belongs to the specialty chemical space as well, where there are niche players and where the expectations in terms of core applications are limited to those niche players. Outside this universe, obviously, I think the third space within the space itself is agrochemicals as well, which is expected to do well as well. So based on our internal rating rankings, the numbers that we've probably seen, the earnings that we've witnessed so far, agrochemicals as a space probably looks better poised at this juncture, Srishti, on two counts. One, I think the expectations of a rural recovery, better monsoons, La Nina conditions evolving would probably mean that agrochemicals generally as a space and specialty players within the spaces might actually continue doing well, based both in terms of volume expectations expected to improve significantly. Farm gate prices have probably seen a better juncture at this point of time, and input costs have remained far more stable. So I think a clear-cut leverage expected to play for a specific amount of agrochemical players. So players like Coromandel as an example, players like Paradeep Phosphate, which are doing backward integration, Paradeep specifically as far as phosphoric acid and sulfuric acid are concerned, should do well. As far as the specialty chemical basket is concerned, and as far as the European market is concerned, the expectation largely is that demand should start picking up going forward as well. You've seen a period of lull as far as the European markets are concerned as well. And therefore, the hope is that as we head into the second half of this calendar year, demand should start coming back very, very steadily. Inventory levels are at low levels as we speak. And therefore, as restocking happens along with improved demand, the pricing element should probably improve as well. Therefore, I think a few players who are exporting to Europe should do well. Specific players like an SRF, specific players like a PI Industries, the second half should be relatively better, because what we've probably seen in terms of these HVAC players, second half surprisingly is better because of the summer season that probably happens, and refrigeration, which is a big part of the business, where a lot of changes have also happened, both regulatory and quick environment perspective as well, should see better volume and pricing growth as well. So I think specific pockets within this space, Srishti, in my opinion, should continue showing better earnings resilience and trajectory.
Okay, that's the take coming in on where there are opportunities within the specialty chemical space. Just looking at the broader end of the market, Dixon, KEI, IRFC, CDSL, these are the pockets wherein you are seeing some weakness. And that's the case with BSE as well. That's really getting, pressured. About 4.5% is the kind of downtick that you're seeing on BSE. Let's just bring up the 52-week chart for BSE because I think these capital market related themes, they fell the last, which is why in the last 52 weeks, you would still see a solid gain of 90% on a BSE or many others as well. But in just the last 1 month or, month to date, perhaps, that's where the weakness has crept in. Kunal, how's the chart for BSE looking?
Yeah, I think after this, recent move, the last 5-7% move on the downside for BSE, it seems as if that the stock has broken a major support for itself. So the structure which was extremely positive for BSE, that's reversed, that's changed, and now we are looking at a potential continuation of downtrend for the stock on the near term. In fact, in the last 3-4 days, I was actually expecting that maybe the stock would hold on to that 4200, 4250 mark and then bounce back from those levels. But the fact that the stock was unable to bounce back, and the first day where the markets have gone through a mild bit of a correction, the stock has reversed its course and then broken below the previous 2-day, 3-day swing lows. So that indicates that the structure for the stock is on the downside. Would expect the stock to drift further lower.
All right, that's the day coming in on BSE. But today, of course, the FMCG basket is doing pretty good for itself. And Naresh, any stock that is holding up for you right now, because it's stocks like Nestle, Hindustan Unilever, they are one of the top gainers in the Nifty 50 side, and even Britannia is showing some bit of a perk up. So any stock within this basket that is looking attractive to you on the technical front?
That would be Godrej Consumer. That looks interesting. It's taken a large knock from 1500 plus levels down to 950,000. And this is the price where it was in 2023 as well as below the 2021 prices. And from here, the stock has started bouncing in the last 2 sessions. So that looks most interesting in terms of a structural move towards 1150, 1200 levels going forward. So Godrej Consumer would be the top pick in FMCG.
So let's watch out for Godrej Consumers. But Mayuresh, talk to us about the two-wheeler pack, because all these two-wheeler OEMs, be it Hero MotoCorp as well as Bajaj Auto, we have seen almost 50% correction from their higher points, while TVS, of course, has outperformed some of its peers, and lesser correction is what we have witnessed. But what's holding these two-wheeler stocks back, Mayuresh? Give us some sense there, because when we compare the segmental performance expectation, then, well, of course, in comparison to passenger vehicle and two-wheelers, it's the two-wheelers that are expected to take the lead. But why are the stocks not doing well?
I think 2 counts, Shrishti. I think one, in terms of the inventory push that has probably happened at the beginning of the festive season, you're probably seeing some element of inventory overhang happening at the dealer and the distributor end as well. And second, I think in terms of expectations of more launches expected to come through, as far as the electrical vehicle platforms are concerned for a whole host of two-wheeler players. I think there is expectation at what pricing will it come through. And there is competition coming through from the unlisted players as well, as far as this space is concerned. Having said that, I think the expectation is just put out in terms of some green shoots that you're seeing in rural economy and the rural discretionary spending per se. As things become more clear and as more improvement starts happening in this facet of the economy as well, I think a large part of the volume growth that probably gets driven through, specifically from rural and semi-urban areas, you should expect some element of pickup of demand expected to come through as we head into the first half of the next financial year. Obviously, tax cuts are probably going to aid sentimentally and to a certain extent from a volume perspective as well, as far as two-wheelers are concerned. And let's not forget that generally, as you head into the second half after an extremely good monsoon, which is expected this time around as well, the perk up that is probably seen historically in two-wheelers becomes even more evident. So the expectation again is largely getting built in because of La Nina conditions of a bountiful monsoon, which means a good Kharif season followed by a good Rabi season to come as well. Might mean that rural and semi-urban demand on the discretionary side comes back strongly. And therefore, two-wheelers, which have probably been languishing for a multitude of these factors, should start making a comeback. TVS has clearly outperformed Srishti, both in terms of volume, margins, and the numbers it has been posting. But in my opinion, I think as these factors start playing out, I think stocks like Hero, which have probably been languishing might actually start making a comeback, and some element of re-rating might be expected.
Right, okay, that's the take coming in on the two-wheeler pack. Let's get in some BTST trades as well going, given that we're pretty much closing in at the low point of the day. Kunal, what's on your list?
I'll go to sell ideas, expecting the markets to drift slightly lower over the next couple of days. So the first one is a sell on IRIDA. The stock confirming a breakdown below its previous major swing supports, just around that 145, 146 mark. So would look out for targets in the range of 136. Stop loss could be kept at 150. And Zomato is something which has started to give a breakdown yet again. It's a bearish flag formation on the daily charts, and stock confirming a break below the 220 levels. So would suggest a sell with a target of 205. Stop loss at 222.
Right. Naresh, what about your BTST trades?
So that would be a sell and a buy. First would be a sell on Dixon Technologies. The stock is broken down fresh. Could see further downticks. Stop loss at 13,500. Target price of 12,500. Buy on Power Grid. The stock has taken out the recent swing highs. Low beta stock. Would expect some more move towards 275 to 278 levels. Stop loss at 268.
All right, let's watch out for these counters. But moving on, and the top global voices remain bullish on India, wherein Chris Wood calls India the best structural story, while Jim Walker says policy stability makes it a standout time to double down, wherein Florian Neto sees India's fiscal path as strong but finds mids pricey. And meanwhile, Vivek Paul bets big on India's AI pivot. Let's go across and listen into them.
Given India's already corrected a lot, it will fall less. But the key market that will outperform if the US market's going down, well, there'll be the two markets which have got a chance of outperforming in the nearest. Well, they have been outperforming year to date, and they can do so more, I would say, are China and India. So China, I've increased my position in China in the last few months. China bottomed last September at about 8 times earnings. And although China is not booming, the Chinese market can double just on Chinese consumers going from pathologically cautious, which is what they were last year, to moderately cautious.
The state of policy generally, so monetary policy, fiscal policy, and exchange rate policy. India looks to, I said this in a report that went out yesterday to our clients, that India looks better to me now than at any time in the last 30 years in terms of policy stability. You know, I've said to clients this week that this is the time to absolutely double down on the long on India, go much, much longer. And although worry about the valuations in the Indian stock market, my view is that economic growth is going to take off from here. And those valuations will be very quickly supported by corporate earnings and by economic growth.
We do feel that the valuations that we are seeing on mid-cap is still a bit expensive compared to what we are seeing from an earning revision ratio on the market. Of course, you can selectively find some stocks, but in general, we do feel that now on the large cap, most of the resit on the valuation has been happening already. The Chinese rally is a tactical rally for now, in our view, but it can become more sustainable. So the question is on the leadership. And we do feel okay having an overweight on India and an overweight on China today in our portfolio. The overweight on China is not sustainable yet, and earnings there is not good enough yet. Okay. So there is good prospect for Chinese companies to deliver more because the business environment is evolving.
Structural opportunities are sizable in India. So if we were thinking for anybody with an investing horizon 5-10 years out, we would be building portfolios today using our core IP where you'd hold a greater allocation than a benchmark weight. And that's true for the bond market, that's true for the equity market as well. And that's a function of structural dynamics being positive for India. But on the structural side, the demographic sort of forces underpinning India are really strong. Most of the developed markets, China, are going to experience a shortfall in working age population over the coming 20 years. India's going to experience a big gain in working age population in the coming years. And you think about the geopolitical dynamics that we're in now, a multi-aligned country such as India is likely to benefit from that sort of environment more in the future.
Right, okay, let's just bring up this chart of Reliance Industries and what it's done in the last 3 months or so. The stock will just come up for you on your screens. Today, of course, it's under pressure by about almost 1%. And this after Macquarie upgrading Reliance as of last week to now an outperform, noting a series of incremental positives over the next 6 to 12 months. They're saying that the bull bear scenario is weighted new target price of about almost 1500 is where they see the stock now at, which is about almost 15% higher than their previous target price on the stock. They're saying that they expect a better incremental earnings momentum and potential spin-off as well, which they think is going to support Reliance's share price. So that's their take on Reliance right now. And of course, there's a note coming in on Bharti as well, which we'll analyze in just a bit. But that's that on Reliance. That's how the stock has actually been. And we've been analyzing that each time the stock has actually hit a low, how much it's rallied in the next 3 months post that, or in the 1 month as well after hitting that 52-week low. Kunal, what's the chart reading for Reliance? Does it seem like it's bottomed out?
Yeah, it seems like the worst for the stock is behind, because the last 4-5 days of participation, the 3 months of selling the stock had shown, and then the 6 months of major underperformance the stock had shown prior to that. So all 3 of the phases for the stock prices we typically look out for. First is a zone of underperformance, then is a zone where the stock price corrects, and then comes a major phase where the stock consolidates and then starts to look a lot more attractive. So in the last leg of this price correction for Reliance Industries, the stock fell from 1300 to almost 1150, 1160 thereabouts, and that's a very sharp cut for a larger cap heavyweight index name like Reliance Industries. And I believe so that those are the points where the stock gets into an extreme kind of a price action, that the risk reward starts to originate to be a lot more positive. Yes, in the last 3 days the momentum has been exceedingly high. The stock went up, I think, almost 100 points from 1160 thereabouts to 1250, 1260 plus mark. So it's bound to be that the stock will consolidate for the next couple of days. But I think largely this 1150-60 mark for Reliance Industries should hold on to, and I believe that any dips, not closer to the 1160 mark, but I think even if it happens closer to 1200 levels for the stock price, should be taken as a good buying opportunity.
Mayuresh, what triggers do you foresee that could act perhaps as catalysts for Reliance to move forward from this 52-week low?
So, afternoon, Ash. I think 2-3 things. One, I think the retail businesses have been doing phenomenally well. So I think any demerger news that the market is probably awaiting, whether it's the telecom operations or the retail operations per se, I think that might act as a trigger for the stock. The second element, obviously, is that within the core retail operations itself, you've already seen ARPU increases as far as telecom operations are concerned. How sustained are these increases going forward is something that the street would ideally like to see, which creates huge amount of leverage onto the individual telecom balance sheet, as well as retail. I think the kind of store openings that Reliance Retail has been doing, the majority of these stores, as that takes place, with discretionary spending expected to come through, with consumption expected to make a big comeback, specifically after tax cuts starting from the first half of the next financial year. I think that can be a huge boost for the retail operations itself. And third, I think in terms of the new businesses or the new energy operations, how are they probably going to capitalize that, along with stability that is probably being expected, both in terms of the oil to petchem business and some hope with the Chinese recovery in terms of downstream product prices, which might actually prop up the overall ROEs, also assuming that debt equity levels stay at manageable levels. So I think these 2-3 things might actually work in favor for Reliance over the medium term.
So that's the take coming in on Reliance. But today, of course, one of the stocks within the diagnostic space is doing well, and that is Dr. Lal PathLab, holding on to the gains of 4%. And that's been the case since the start of the day. What we are seeing is that, well, of course, there's been a lot of chatter with respect to the tariff risk when it comes to the pharma majors. But when it comes to the diagnostics, they seem to be a bit better placed. But Kunal, if I can quickly have your take on Dr. Lal PathLab. How do you see the stock set up? Because off late, the stock has been doing decently well, and for the past 3-4 days, I believe that it's been on the up move.
Yeah, it's been on the up move, and from 2300 levels, the stock has come back to 2600 mark. But apparently what happens is when stocks come back into a peak of momentum, and when the market starts to reverse, or at least show signs of mild reversal, there are bound to be these stocks which may look attractive in terms of breakout. That's the way these stocks, they generally tend to reverse course for themselves with very near-term charts. So I think rather than buying this on the very steepest degree of momentum, I think one needs to wait out for a point where the stock would show signs of reversal. Typically we look out for the 3-day swing low as a good retest zone for stock prices. So in this case for Dr. Lal Path Labs, that comes to around 2480, 2490 mark for the stock. So I would probably look out for maybe a contra buy, not at current levels, but in case if there is a mild correction, the stock dips down to 2480, 90 mark.
All right, that's the technical check coming in on Dr. Lal Path Lab. But with this, would like to thank Mayuresh as well as Kunal and Naresh for taking the time out and speaking with us this afternoon. So as we wrap up the day, though, on the first half of the trading session, we have been holding comfortably above that 22,600 mark. But well, of course, we are off the day's highest point. So let's go across to Ashesha, who is joining us for the market closing. Take it away, Ashesha.
Well, yes, Shrishti, we started off the day with nominal gains built onto gains only to lose them in the second half of trade. Nifty now down nearly 100 odd points near that 22,450 odd mark. Nifty Bank also off from the highest point of the day. In fact, it is ending the day down nearly 310 odd points near that 48,185 odd mark. All sectoral indices except Nifty FMCG index are ending the day with cuts. Nifty FMCG index, Nifty small cap index in fact down over 2%, Nifty mid cap index down 1.7%. So across the broader markets were also under pressure today. Nifty Realty FMCG index was the only sectoral gainer in today's trading session, up 0.2% as we speak. HUL, for instance, was up 2%. Nestle and ITC were also holding on to some nominal gains in today's trade. Nifty Realty Index was the most impacted sector. In fact, the index is ending with cuts of nearly 2%. We had the likes of Mahindra Lifespaces, which is down to 6.5%. Raymond and Lodha are also ending the day with cuts anywhere between 3 to 4 odd % in trade today. PSU banking stocks were also under pressure today. Indian Bank was down 4.5%. Central Bank and Punjab and Sindh Bank also ending the day with cuts of nearly 3 to 4 odd %. So a whole host of PSU banking stocks were also under pressure today. On the flip side, let's also talk about IndusInd Bank from the private sector banking space, where Reserve Bank of India approved extension of MD and CEO Sumant Katpalia by only 1 year as opposed to expectations or application for 3 years. The stock was reeling under pressure, ending the day with cuts of over 4%. 900 is where IndusInd Bank is ending the day. Jefferies, of course, retained its buy but lowered its target price on IndusInd Bank to 1,080. The stock was under pressure today. IDFC First Bank, we saw that sharp uptick come in on the back of its news with respect to stake sale, which is likely to be done by the end of this month. Some reports coming in over here. IndusInd Bank, IDFC Bank was in focus today. A whole host of power stocks were also buzzing in trade today. There are expectations that power demand is expected to pick up in summer season this year. So we had Power Grid, which was up 3%. In fact, not just Power Grid, several other power stocks were also gaining in trade today. But all in all, Nifty gave up all of those morning gains, ending the day 100 points lower near that 22,440 odd mark, and broader markets were also under pressure today. That's all the time we have on this edition of the show. Thanks so much for tuning in.